What is going on with Drift protocol? Why is the price up? Is this manipulation by a few whales? Is this adoption of the protocol of the platform? A lot of purchases by small retail investors. Let's have a look behind the price action. Let's try to figure out if it still makes sense to buy Drift. Now we're currently at $1.82. We are up 25% today, and this month we increased by 276%. Now this is not the first video on Drift on this channel. I published one 3 months ago, so 96 days ago, and initially the video didn't perform too well. It slightly outperformed the average video, so the average video is here in gray, but then came a second wave of interest, and of course during that time the price went up. It is now overdue to make an update and see what's happening. Now at the time of that first video the price was at 48 cents, and so since then we more than tripled. And so I tried to find altcoins that have positive momentum but that also have a lot of further upside potential, and I publish videos on this channel regularly, so if you don't want to miss the next video, feel free to subscribe. Now let's go deeper into Drift. Drift is a platform of two things. The first is a betting platform. So there are bets, for example, on sports games. But there's also political bets. And it was the political bets that caught my attention. With the presidential election, people were looking for opportunities how to play this without taking sides, and betting on the betting platform itself might make sense, and that's why we saw our first little rally. Now the major platform for betting on the presidential election turned out to be Polymarket. There were hundreds of millions involved, and in the end, of course, Donald Trump won. And so the total value locked of Polymarket completely crashed from 500 million to currently only 100 million. Which makes sense. And so what is currently carrying Drift is not any presidential election, etc. That thing is over. What's now carrying Drift is the second leg. And so what is currently carrying the Drift price is not the presidential election, right? That train has no longer been gone. What is carrying it is betting on meme coins. Have a look at this. This is now the landing page of Drift. And 2 months ago, this was very different. But check this out. This is now the USP. Ape into your favorite memes with leverage. So you can buy Dog with Head with 4x leverage or Dogecoin with 4x, etc. All the larger meme coins can be traded with leverage because, of course, meme coins aren't yet risky enough, right? We have to lever this higher. But how much are people actually excited about this whole platform? Are people using the platform? Are people buying the token? Now let's see who is driving the price here. Let's have a look at the retail investor versus the whale investor, so the number of investors over time. And let's distinguish that by minimum holding thresholds. So on the left side, we've got the number of wallets that have at least 500 Drift tokens. At the current price, that's roughly $1,000, a bit less than that. For the chart in the middle, we go at 10x in minimum holding. So that's now 5,000 Drift tokens, or $10,000 worth of the token, and on the right side another 10x, 50,000 Drift tokens, or $100,000 worth of the token. What do we see? We see how small retail tends to simply sell off the airdrop, and then has also sent some tokens to the centralized exchanges when they listed the token. We see a very similar behavior with medium-sized retail, but we see the exact opposite with the whales, right? The whales also got an airdrop, but they did not sell. They rather tended to accumulate. They are very close to an all-time high. Now this is super bullish. We want to see the whales or the smart money buying into a token, while the selling pressure of small retail tends to succeed. Because this is how crypto works, right? It's both a game of luck and skill, and the longer the game is played, the more the capital accrues towards the people that are more skilled. So the whales tend to make the better calls. We better follow the things that the whales on average do. And the whales are buying and buying, while small and medium-sized retail isn't doing much. We can of course see how the Drift price also moves in attention waves. So on the left side we've got the trading volume in US dollars, on the right side we've got this normalized to 100%. There's no clear long-term trend in the segregation of the trading volume, but yeah, currently we are rather at slightly higher attention. Of course, when trading volume goes down a bit more, then the price might relax as well, and it might be an even better buying opportunity compared to now. And so here's what caused the dip in the number of holders for small and medium-sized retail. It's the trading on Bybit. Now most of the trading actually happens directly on Bybit, but there are also perpetual futures on the price, and that's dominated by Binance. Binance is notorious for adding volatility to crypto prices, so don't be surprised to see still another 20-30% drop to then afterwards see another 50% increase, etc. There is increased volatility with Binance futures for the spot market as well. The centralized exchanges make money with volatility. The more the price goes up and down, the more trading fees are generated, and of course also the more liquidation fees are generated. Now, why are the whales accumulating? I believe it's this here. The total value locked on the Drift protocol continues to increase. And it's now close to 1 billion. And just in the last few months, this more than doubled. And yes, crypto as a whole went up, but even measured in Solana, we see very constant growth. This chart here looks so much prettier compared to this chart of Polymarket. It looks like Drift really made successfully the switch from betting on the presidential election to now betting with leverage on meme coins. Well, have a look at this here. This is the US dollars deposited on the Drift protocol over time. There's a new all-time high almost every day, and of course when we accumulate this, it looks even nicer. Currently there are roughly 1,500 spot traders per day on the platform. And it seems like it's just the existing number of traders that are moving more and more capital, right? The number of traders isn't really growing that much, but the capital that's moved is definitely growing. Now, crypto as a whole is currently expanding very, very quickly. What we've got behind me is the stablecoin market cap. And this is a 3-year chart, so it starts in July 2021. And we peaked in the stablecoin market cap in April of 2022. Over here, what happened was the Terra Luna collapse. So this is when Anchor protocol went bust. This is when UST depegged. The market as a whole shrunk, money was flowing out of crypto, and this is also where FTX collapsed. And then we saw the turnaround in October of last year. Now money is flowing into crypto again, and that's recently accelerating. The stablecoin market cap going up means, of course, that money is flowing from fiat into crypto, and that of course means that prices across all of the crypto space should continue to rise. I really like this chart because it has very little volatility. We can see the trend very clearly. In the short term though, we might be slightly heated. What we've got over here is again a stablecoin market cap chart, but this time that's not in US dollars. This time it's relative to the entire crypto market. So you might have heard of the Bitcoin dominance chart, right? How much of all of crypto is currently in Bitcoin? That's, by the way, currently at roughly 60%. It tends to peak at around 70%. What we see over here is the stablecoin dominance. So how much of all of crypto is currently in the stablecoins? And there is a strong inverse correlation between this and crypto prices. So when the stablecoin dominance is high, crypto prices are low. And when the stablecoin dominance is low, crypto prices are high. And we seem like, at least temporarily, to hit some potential floor here, which might mean that some cryptocurrencies might see local tops. That being said, especially in the last few days, we do see how the altcoins tend to outperform the rest of crypto. So this is the others dominance. So this is the cryptocurrency market cap that's not in the top 10. And this did go up since beginning of November to today by 23%. It appears as if there is some kind of altcoin rotation happening. At least we see the beginnings of it. And so what was the best performer across all of the altcoins in the last week? It's Virtual protocol. Virtual is a launchpad of AI agents on the base chain, and it almost tripled in the last week. This is the long-term chart, very impressive. And the big question is, how can we buy something like Virtual when it's not up there, but when it's somewhere down here? My answer to this question is wallet tracking. It's trying to figure out what are other smart investors doing? What are insiders doing? What are people doing that move prices? What are people doing that tended to make the right calls in the past? And so it's always nice to see what is the smart money doing, what is the not so smart money doing. For example, this over here. This is an alert that BitBoy Crypto sold virtual tokens at 1.4 cents. We don't have the alerts where he bought this, so maybe he got some allocation because he's an influencer, but he sold his allocation. He did this multiple times, by the way. And again, what he sold subsequently went up by more than 10,000%. And so yeah, BitBoy Crypto, in my opinion, is pretty much the Jim Cramer of crypto. It doesn't make sense to copy trade him, but it's interesting to see what he's doing. There are other people though that are worth copy trading. For example, over here, we've got Crypto Gains that bought the virtual token. That was at 5.8 cents. So since then, the price went up by 2,500%. Who is Crypto Gains? It's this influencer here. He tends to buy tokens relatively early, and he tends to also be very public about his purchases, which can generate, of course, a lot of attention and can bring in more investors, pushing up the price further. So he does very risky plays regularly. He's got 138,000 subscribers. And so how do we get these buy and sell signals? It's through finding the right wallets first and foremost, right? It's doing some on-chain analytics to figure out those wallets. And it's subsequently by putting those wallets in a wallet tracker and get notifications whenever they buy and sell. So over here, we've got the wallets by CryptoGains that we are tracking. We've got 55 of his wallets. But then at a later point in time, we also see more people buying into the virtual token, the people that tend to deploy much more capital. For example, over here, we've got Kyle Chessy that bought $100,000 worth of the token, and that was at 48 cents. And so here is Kyle Chessy. He's got 137,000 subscribers. And since he bought, the price went up by 220%. We've got 12 of his wallets, and of course not every trade goes like this, but in general, right, I do believe it makes sense to follow the smart money. It is much better to follow the people that tend to make profit compared to simply just picking random tokens in a list. And so I like this approach that much that I made 8 dedicated tutorial videos just on this wallet tracking topic. They are over here. It's how to find various influencer wallets. It's how to track those influencers, and it's also about how to interpret the signals that we get from the tracking. It's all part of the premium membership of this channel that's down below, thebitcoinstray.com. It's not just wallet tracking that we do, it's also risk mitigation, portfolio diversification, back testing. There's more than 100 tutorial videos in total in premium. Once we've got a signal, we of course also have to discuss when should we buy, when should we sell. That's why we've got our dedicated chats for the individual altcoins as well. So feel free to check it out. It's currently $165 per month. There's also a 1-week money back guarantee. So in case you don't like premium, in case you don't learn anything, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. And so does it still make sense to buy Drift? Is the risk worth the potential reward? How much more upside potential is there? Let's have a look at some comparisons. So first of all, there's of course the prediction market, right? The poly markets of this world, the betting platform. In that ecosystem, Drift Protocol is at number 2. It's got a market cap of 450 million. And it's half the size, a bit more than that, of Gnosis. Now, Gnosis is not just a prediction market, but still, it gives us an insight of how large Drift actually is in the space, relatively speaking. But again, most revenue doesn't happen from prediction anymore. Instead, it is happening through 4x leverage meme coins. And that can be summarized as the decentralized derivatives market. And over here, we've got Drift. DYDX and Synthetics are very large protocols that do have a lot of use as well. So that would be a 2x from here. Pendle, in my opinion, is a bit more of a snowball kind of DeFi protocol, so not necessarily too sustainable. But yeah, this is where currently the upper threshold tends to be in terms of market cap, maybe a 2x. So really what we are now betting on with Drift is that the market as a whole will expand, that crypto trading and meme coin trading as a whole will expand. It's not necessarily that Drift gets more adoption compared to the rest. It's all about being early, and of course the first video on this channel on Drift was early. This video isn't that early anymore, right? We're not going to see a 10x in Drift anymore unless Binance suddenly decides to completely manipulate the hell out of the token. But I do not necessarily expect that. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers!